Thank you very much for joining our conference. My name is Benjamin Tai. I'm the president of Wave Financial, and I have the pleasure of hosting today's panel on derivatives, including crypto derivatives. Before I start, I'd like to thank all the speakers that were able to join through our event today. I've found it very exciting, and I'm looking forward to also all the other panels that are going on. But before that, we're going to focus on having a chat about derivatives. Today we have joining us Nicolas Bertrand from the LSE Group, Catherine Coley from Binance US, Ari Paul from BlockTower, and Anand Gomez from Paradigm. So I'll let each person do a little bit of an introduction themselves, and then we'll kick off into derivatives. Let's just do it in the order, I guess. Nicolas, would you like to kick off?
Hi, my name is Nicolas Bertrand. I'm the head of derivatives and commodities of Borsa Italiana, the Italian stock exchange, part of London Stock Exchange Group. I'm based in Milan, so I'm happy to represent a bit of Europe. So we are in lockdown since the 24th of February, which explains my long hair but very, very, very active and as an exchange, very present with clients and using the modern tools of nowadays. So hello to everybody.
I'm Ari Paul, co-founder and CIO of BlockTower Capital. My first job was as an options market maker at Susquehanna. So I kind of started with derivatives and finance, and then at BlockTower, we've been kind of early movers in derivatives just as users. We're not market makers. We're definitely not the most sophisticated, but late 2017, we did a big options trade that kind of made the news. We did a variance swap, and we actively trade crypto options today.
Hey, I'm Catherine Coley. Much like Ari said, I started my career in traditional finance on Morgan Stanley's FX desks, where we covered FX derivatives and certainly traded a fair amount of those across emerging markets and G10. Coming into the crypto space, I run Binance US, and we are currently a spot market, but our global partner Binance does have the leading derivatives platform at the moment.
Hey guys, much like Ari and Catherine, I also have a traditional capital markets background. I started out on an interest rate derivatives desk, then did energy, and then did credit for a couple of years, and then finally took the plunge and went all in crypto. I currently am a co-founder of Paradigm, which is an institutional grade communication platform that allows traders to basically automate their over-the-counter trading. And right now, our kind of core product is block trades. We are the block trading partner for Deribit, and we've recently also just launched block trades for the CME.
Great, thank you very much. And on my own background, I spent 12 years on the trading floor with Merrill Lynch. Running the structured products desk, which is really the derivatives desk for equity, FX rates, and at one point also ran the commodities business across Asia for Merrill Lynch. So yeah, derivatives is really near and dear to my heart. Sounds like everybody actually comes from the traditional finance background, which is interesting. Maybe we should have found some more crypto-oriented people for this panel, but this is great. I think it's good because people start from a solid foundation of kind of background, and would love to get started. I think let's start with a little bit more on the background side, and for those of us that are less familiar with derivatives. Nicolas, can you talk a little bit about kind of what you've seen with regards to traditional derivatives, across the LSE group and also just globally? And I believe, the derivatives market actually outside of the US is actually potentially bigger than just within the US. So would love to hear the international view there.
Yeah, thank you. I mean, I think we are, in Q1 2020, we are definitely in front of a very important surge of trading volume in derivatives globally. According to the Future Industry Association data, which condenses about 80 exchanges together, about 11.4 billion contracts were traded globally in Q1, which makes a new record. It's up 43% against Q1 2019. And definitely consistent across the globe, consistent across asset classes. Probably the one with the highest increase is equity, with equity indices with a plus 62%. And then you find, smaller asset classes, which we talked about on the last panel, like precious metals, which is up 83%, obviously a much smaller part of global derivatives. So when you look at the difference between futures and option, you can see that the futures market is definitely showing a breakout. So volumes are up very significantly and definitely on the highest high. Whereas on the option side, which is a more refined and more difficult product to trade, a more recent product to trade, let's put it this way, we see a continuation of the trend whereby every single quarter by quarter in the last 10 years, you can see an uptick. So basically, that growth is a general growth, which I think is an illustration of the value of derivatives in the financial markets. Then, when you put the spot on Bitcoin, I was looking a bit at CME, Bitcoin futures, which is the leading market for that. Volumes were definitely high, but the increase was not significant. So you can see January with a little peak of about 25,000 contracts and relatively stable open interest at 5,000 lots. So I think what it means is that it's probably on the derivative side of Bitcoin, the listed derivatives, I mean. I don't really know what's happening on the OTC, so maybe other people can comment. But on the derivatives, on the listed derivative side, we are probably in the very early part of the cycle.
Great. Thank you. Yeah, so I know internationally, when I used to be on the trading floor, I spent a lot of time doing derivatives, and most of that was actually OTC. I think people in the US are typically very used to seeing a listed market, knowing the depth, knowing the players. But kind of in the more traditional derivatives, even in equities and fixed income, it's a lot of just calling your counterparties and doing OTC when I was in Asia. For a lot of the Asian names and rates and equities and so forth, there isn't as much of a listed market, and I think people are comfortable with that. I'm starting to see that develop a bit more also on the crypto side. I think people are comfortable doing a little more OTC, and I would love to hear more kind of from that direction. Catherine, do you want to comment on kind of what you've seen so far?
Yeah, I think it's pretty topical that we've got a team right here of all former or existing Wall Street veterans. And that's kind of the beauty of this space, is that the miners that necessarily began the early days of Bitcoin OG may not have predicted that options were the ultimate goal. Whereas coming from the traditional side, we all covet options as the magnus of the markets that we were actually trading. Spot markets were, relatively liquid, but then the options markets were the ones where you had the real juice. So that's where I see us being able to kind of merge those worlds and say, in best practices, what did we do to protect against illiquid options that we were doing? I mean, trading Saudi and Turkey, those are not necessarily your most liquid books. So how are we able to translate kind of that risk management into how we're dealing with crypto? And that really does come down to becoming more comfortable with the OTC factor. So I think that's something that it did not necessarily begin that way, of Bitcoin and crypto being available through OTC. And we're seeing that become more of a prerequisite just because of the difficulty of pricing these things.
Great, thank you. Yeah, I think for us, we are very excited by this whole space. And one of the things I found really interesting was the fact that there is a blend of OTC and listed at the same time with regards to, for example, what Paradigm is doing. And so I'll kind of yield the floor to Anand to talk a little bit more about his business. And I think people have a little less familiarity with his business if you don't use it. So Anand, you might want to give a little bit of background on what you do also.
Yeah, sure. So the easiest way to think about us is think of an RFQ style trading platform embedded within a chat platform, right? So if you used Bloomberg Messenger before, just think of a platform such as TradeWeb, but embedded within Bloomberg Messenger. It allows you for best of both worlds, right? The unstructured communication for bespoke transactions or structures, as you know, Ben, I'm sure you've executed hundreds of thousands of times before, and that always required an element of negotiation, right? Because the structure itself was custom, and therefore the pricing for it was also not like straightforward. There isn't no screen available for it, and so for things like that tends to happen over chat or over the phone, right? And so what we've done is we've basically tried to automate that process as much as as possible, right? And what that means in practice is we have an RFQ protocol or process that's kind of embedded within the communication channel itself. So that's the idea. Right now we're live with Deribit, and 100% of Deribit block trades go to us. What does a block trade mean? So think of every time somebody wants to trade, or like an institution, for instance, wants to get into an option position that is of significant size. Option markets on screen right now don't really have the liquidity to support anything. It depends on the strike and the expiry and things like that, but anything over like 50 Bitcoin, it starts to get a little bit hairy in terms of being able to actually execute that when you on demand, right? And so block markets kind of take care of that, is because you have like a ready-made a cohort of market makers willing to give you a price on demand, and you can basically negotiate the price for that, because again they aren't advertising this price on screen. You have to ping them via an RFQ in chat, and then get that price, consume it, and then basically we clear it on Deribit, right? So that's what we do. In terms of the volume, I think and how volume has grown, I think it's very similar to what Nicholas mentioned. Futures markets, as we all know, have experienced a breakout over the last in crypto over the last 24 months or so, right? But options volume, just like he said, have been progressively increasing. Last year, the growth monthly was not as much, but there was still growth. But this year, it kind of from January through now, we've seen an explosive amount of growth. So to give you some context, when we launched our product in August of last week of August in 2019, your daily volumes were anything between 30 to 40 million, right? As of on March 12th, we peaked at 250 million in terms of your daily volume, and we continue to see an influx of new counterparties, and I think now with this kind of second wave, as I call it, after March 12th, I really think we're poised to see that continue to grow extremely well.
Yeah, it's actually very amazing. When I first heard about it, my first reaction was, "Gee, another chat program. Like that's what I really need." So, so I didn't think much about it, and my assumption was that then somebody's just going to dump an order on exchange. I have to go hit it before somebody else takes it, that type of thing. And when I actually used it, it was very impressive. All the back end is automated, and the orders actually are matched up. So it's more than just a chat protocol. So. Yeah, and just despite the fact that NN's now charging for his services, the volume is actually going up. So it's actually very impressive from that perspective, also.
Yep.
Yeah, Ari, would you like to comment kind of on your experience in trading that? I don't know if you're on Paradigm or not, and what you've seen.
Yeah, so we do use Paradigm, and it does provide a really critical service because yes, you have a fairly light options market on any individual exchange, whether it's Deribit, fairly light. Certainly from an institutional perspective, you can't go out and trade $1 million of premium. So having a way to standardize is so important, because throughout 2018, we were looking at doing chunkier option trades, and a big obstacle was doing them OTC was, well, how do you define the trade? So using an ISDA, and this gets tricky from the engineering sense, because what is Bitcoin? What happens if there are forks? What happens if you have engineering disruptions or delays? What happens if the network is offline for 10 blocks and you can't make delivery? With other networks, you have issues around things like airdrops, right? So these all have to be kind of carefully thought about and defined in a contract. And for everyone to have to do that themselves every time is a non-starter. So having that kind of standardization to do larger bulk trades is super, totally critical. Right now, I think the options market is pretty bifurcated. You have the unregulated exchanges, or I don't know if I'm using the term quite correctly. Deribit might fall under some, but basically unregulated from the U.S. perspective exchanges, and they're great. That's not a criticism. Where you have a lot of fast-growing volume, and then you've had less growth from the regulated side, for a bunch of specific reasons. So like all of our counterparties tell us they want to clear through Deribit using Paradigm and not on CME, even the regulated OTC desks, because CME requires so much margin. And there's so little natural liquidity that it's kind of a one-off trade that they can't trade against or hedge or cross margin. So what I think is going to happen is we'll see kind of two parallel option markets and then arbitrages between them, somewhat similar to what we've seen with regulated exchanges and unregulated, and then arbitrageurs who kind of keep the two in line. Right now, the growth is clearly on the unregulated side because there just isn't enough depth for big institutional hedge funds to do anything. And you don't yet have that standardization OTC for someone to come in and do, a $10 million premium trade. And most of the institutions that would be interested in doing OTC aren't really ready to from scratch negotiate a contract and define all of these terms. So I think it'll happen. It's just going to take a little bit longer. Near term, I agree. I'm excited for kind of the explosive option growth that we're seeing, being driven a little more by retail, but then the kind of crypto native hedge funds like us, and then soon some of the more traditional hedge funds that are willing to get in the weeds a bit more.
I'll just add to that really quickly, Ben. Ari mentioned all great points, by the way. But one thing I'll add to that in terms of the growth, the retail segment, absolutely right. There's a bunch of retail that continues to new retail money that comes in, but a bunch of growth that we've seen is actually from either structured products or issued by lenders in Asia. Right, that has been probably the biggest sector, the biggest driver of growth for options. Whether it's and I like to use the term rolled up retail. So they are themselves institutions, but they have such an really vast network and distribution of retail clients that they're offering structured products, but they don't obviously call them structured products. It's basically something simple as the ability to bet on Bitcoin using an app, right? And then they're basically turning that around and then using the institutional market, which is via us, to kind of hedge that into the wholesale market on us. And of course, there's a bunch of counterparties that are willing to take the other side of that. But that has basically been the biggest driver over the last 4 or 5 months or so. And then also now, as the chicken and egg problem, right? As the market also has started to gotten more liquid, that has attracted more people, both on the taker side as the maker side. And now you're seeing a bunch of lenders who are using it for protecting their collateral values, especially given the events of March 12th. The whole concept of risk management. I mean, Bitcoin was already volatile to begin with, but what happened on March 12th was basically broke businesses, right, and completely killed business. And so people's idea of, hey, I really need this, has changed. And so we've seen an absolute a surge in counterparties since then. So even though volumes were down out in the weeks after March 12th, the number of onboarding, the number of new counterparties we were onboarding was just through the roof.
Yeah, I think that's a great point, and that's actually somewhat similar to what I've seen in the traditional markets. And just to kind of take it to a very simple level, we typically buy volatility from retail in structured products, and we sell that volatility to hedge funds. And that's been true for the past, let's call it 2 decades. And that's true in equities, that's true in FX rates, and so forth. So I think that that's because of the fact that both sides exist, and that's why I think it's a good market there. And I think Anand brought up a good point. When we buy retail vol, we're trading in the market as professionals, but the back end of that, the demand for that service actually comes from more retail. Nicola, what are you seeing kind of more from in terms of traditional? What are you seeing in terms of retail and so forth out of Europe, and more specifically Borsa Italiana? Do you think all those people may be interested in playing with crypto options?
Definitely. I think there is a huge interest in the market from the client base to trade futures and options. I think there are two points really. And the first point is that basically these 2 worlds of OTC and listed derivatives, which most exchange officials would say, they would fight for the listed bit, obviously, but actually those 2 worlds are absolutely correlated. I mean, you can see, history tends to repeat itself. The listed derivatives started in the OTC. So you need to have to develop a vibrant OTC market before you start seeing some green shoot in the regulated listed derivatives. I think it's a very important point. I mean, when I joined Borsa Italiana about 20 years ago, believe it or not, we started that market, which was completely virgin, and we invested a lot of our effort in, really on this point, on joining the dots between the OTC and the listed. So I think it's very important. It was a very successful strategy. Then the second point, I think, which is relevant to your question, is the options world, because really the sweet spot of derivatives is options, in my view. Why? Because human thinking, human brain, is always behaving in an option concept, right? You never do something and that's it. You only do something if something else happens, right? Or if so, it's an if-then-else type of reasoning, and the option is very well fitting that sort of thinking. So that's why I think, generally speaking, in the world of derivatives, options have still a very, very long way to go. What we see in Italy is that, obviously, as in every market, first of all, we have a very retail market in Italy. Even on the equity side, 30% of our trading volume, which means €1 billion a day, is coming from private investors, right? On the cash market. So the cash equity market is a linear product. In the derivatives, in the listed derivatives, it's a little bit less. We're about 20%, but the product is more complex. And then when you go into options, it's even less than that. But what's interesting is that we've seen in the last couple of years strong and steady growth of interest in the option space. So I think that's, we really need to pay attention to options. There are lots of skills that traditional people can bring to the Bitcoin crypto world, if you wish, in order to, with the strategy and the approach that have been successful to build those listed derivatives markets. But definitely to close on the answer, from when I look at our client base in Borsa Italiana, and we talk to retail clients very often because they are key to us, we can really perceive an interest in cryptocurrencies in general.
Yeah, that sounds really good. I'm actually quite excited about that, from a European perspective. And switching gears and looking kind of more on the Asian markets, and Catherine, I don't know if you want to comment a bit about that. I understand you're more focused on the U.S. part, but obviously you're partnered with finance. We would love to hear more there. And I don't know if you're watching the chat, quite a number of questions have come up with regards to kind of, finance versus finance US and so forth.
Yeah, that it's kind of interesting. I'm focused solely now on the United States, which is a change from my prior career where I was based in Asia, focused on the world. So it's a different market now, being able to cater to it, but one that is most focused on the traditional side. Options has always been a global book. So that's kind of an interesting thing. A question I do have kind of for this group as well is what aspects of, sorry, there's someone having a conference call in the background too. What aspects of the traditional market do we think are going to be dropped when we're building things out in crypto? I'm recently seeing the discussion between American and European options. That's a nuance that, do we have to carry that over into crypto? Do we have to or are we going to phase out of vanilla options into exotics? Kind of where are we going to cut off traditional aspects of options markets in the play out of digital assets?
Let me actually, if you don't mind, just throw something in. I'm less thinking about what we throw away from the old traditional world. I'm more thinking about what more can we do in the new world. One of the things that we've been discussing, which I found very interesting, is perpetual options or perpetual futures. That's something that's not very common in equities or FX or rates. I know people have tried before, so it's not like it's not like some crypto guy came up with it brand new, but it doesn't really exist in the traditional world. But in kind of crypto, of course, you have futures and you just trade it, and it's very commonly adopted and accepted. Very curious as to what your thoughts are on that, and happy to comments for any of our panelists, on that point.
I'll throw out a comment, but Catherine, you may have more interesting thoughts on what could be innovated on. So I'm a pretty big fan of simplicity when it comes to derivatives, just because of the incredible friction and risk, and as it is, unsophisticated investors very easily make big mistakes. But as an example of something that wasn't even complicated, but really, I was surprised at how many people were surprised and how many people misinterpreted. So when we had kind of the almost flash crash-like action where Bitcoin fell to 3,500, I think there was really one critical takeaway from that, which is when you collateralize leverage with the same asset, that becomes inevitable. It's not it becomes possible, it becomes inevitable. Because, so to clarify for anyone not familiar, so BitMEX had cascading liquidations where an entity like us, for example, literally, this is the kind of thing we were thinking about that night. If we bid for $1 and we over collateralize 10x, we will still get liquidated at 0. Because at 0, our collateral is worth 0, and therefore we're just liquidated. So that's why no one stepped in to buy, because everyone like us said, this just doesn't work. We can't bid even $1, right? Whereas in spot cash, of course, you'd be thrilled to buy Bitcoin for $1 on a flash kind of candle. So as things get trickier, you get more and more kind of those crazy scenarios that can happen, and they happen more frequently, and people understand them less. I'm a fan of innovation. I'm a fan of experimentation. Don't get me wrong, but it's going to take a while to develop these markets, and certainly users should be pretty cautious around novel structures and make sure they really understand them and can think about the edge cases.
Yeah, well, once again, I'm interrupting, but I think some of that has to do with exchanges that have decided to only focus on certain currencies. For example, Deribit's only doing Bitcoin and all the settlements done in Bitcoin, which to me was somewhat of a foreign concept. I keep trying to wrap my head around whether options payout in dollar terms is linear if you do settlements in Bitcoin, and I think the answer is probably not. Actually, if you look at it, there's some very, very minute technical differences there, but I think having more players in that, we may get the different variations. So yeah.
I'll just add really quickly to Ari's point. I think that's a great point. I feel like sometimes, actually, it's probably more than sometimes. The crypto market seems to want to do things from scratch when it really isn't needed. Right, and there's so many of these problems. We've lived through this in the old markets, right? There's a reason contract design is the way it is because we've gone through flash crashes and squeezes and all kinds of things, and that's why that contracts have evolved to look like they look currently. But in crypto, I think it's also has something to do with the spirit of just being like, the freest market there is, and people wanting to do everything on their own and not being told and things like that. But I just fear sometimes, like Ari said, like it shouldn't. Long story short, I think what will happen is people will learn, but they'll learn it the hard way, right? And that you saw that on March 12th. Market makers blew up. Hedge funds blew up, exchanges got hurt. There's, and then now they're talking about circuit breakers. Now they're talking about stuff like that, right? But there really isn't a need for us to go through that to instate things we already know work. So, I feel like, as kind of, stewards in this market, there's a lot that, we can do. And we try to do that at Paradigm is like, we're also fans of simplicity. We like to make things as simple as possible, and not over engineer anything just for the sake of doing it to sound cool or look sophisticated. Right. So yeah, I just want to, add to that.
I think you're saying that the ultimate goal for us is to get UBS to open source their GUI for options trading.
I mean, look, the stuff that we've built at Paradigm, our RFQ builder goes live on Monday. It's we didn't try to recreate anything. We built things that resonate with traders that have come from the old markets, and they're like, yeah, this just works, right? So that's no bullshit. So, yep.
One interesting word came out. Maybe we can just have a quick chat on this. I think there's a discussion of circuit breakers and whether that makes any sense. Conceptually, I like that, but I think conceptually, typically with circuit breakers, you have one exchange that dominates the trading of that asset, and when you stop that exchange, you stop trading of that asset. I guess in crypto that doesn't work, because if you stop, for example, on Binance USA, you stop trading Bitcoin, it does not mean the price of Bitcoin doesn't continue falling on every other exchange globally. What are your thoughts on this? Is that pretty obvious, and that's just that's a very small bulb I got there?
Yeah, I mean, circuit breakers, there's kind of two realms of thought. One, like let the people trade. And then the other side of it is, yes, it's really productive against market manipulation. So when we're thinking about how can we build healthy markets that do allow for more people to enter them, do allow for more audiences to be comfortable trading, that is something where we really have to take into consideration the market manipulation aspects. So that's where we're siding on the side of what could we do to enhance that feature. But you're absolutely right. You'd need full cohesion against every single exchange. And given the fact that you can trade through local Bitcoins, through just centralized platforms, through centralized platforms, that's going to be my next decade of work.
As a user,
sorry, I think it's a very important point, and it depends on really what you want to achieve as a trading platform, right? I mean, of course, if you focus on volume for the next day and your platform has stopped for a few minutes, we're talking just a few minutes, right? Maybe your competitor is going to make a little bit more volumes, but then, I mean, don't you want a better protection of the end client at the end, right? I mean, I can see, for instance, I mean, we've done that thinking a long time ago in London Stock Exchange, and in Europe, we had the circuit breaker before the flash crash in the US. And guess what? We had absolutely no flash crash at all. Yep. The US was, everything was going to zero because the market was protected by circuit breaker. And guess what? A year or two later, all US markets go and implement circuit breakers. So I think it's important, competition. I mean, you need to look at your the health of the platform.
We absolutely.
For instance, I mean, in LSE, we know all these topics. We have even circuit breakers that are managed on the spot by staff, on certain more illiquid names, and it's perfect. It's about the quality of the market you want, I think.
We absolutely care about the quality of our product. It was on Monday where we had to do a nearly 12-hour system upgrade, which to us is half a day of trading volume. And so that was a huge concern of ours. However, being able to upgrade our systems allowed us to have one of the largest trading days yesterday without any issues. So we were able to be, the most reliable platform in America yesterday, which came at the cost of taking protection early on.
I was thinking for the industry in general, for not specific trading platform, but then I think there is a thinking of the industry, what.
So you can't do it at the industry level, though, right, Nicholas? Because you can't enforce it. So the asset will be trading. So what's the real purpose of circuit breakers? I think it's orderly liquidation. So an issue, using that BitMEX example, the issue wasn't that there weren't buyers at 3,500. There were. The issue was there were no buyers with capital on BitMEX who could buy on BitMEX for technical reasons. Or sometimes you have delayed deposits or delayed deposit confirmations, right? So the liquidity was there, the demand was there, as we saw. I mean, within 6 hours, you had Bitcoin over 5,000. I think that's the key. It's obviously and for anyone listening, circuit breakers are not about preventing an asset from going down. It's going to go down. It's really about preventing the weird second order effects of a disorderly move, which could be market manipulation, could be cascading liquidations where buyers who want to buy just aren't able to. So then you get stops triggered that should never have been triggered. And that isn't really good for anyone other than potentially an insurance fund, or, I mean, you always have, let me put it this way, there's always someone who profits. I shouldn't say it's not good for anyone, but probably overall not good for the market to siphon money away from retail and fundamental traders into a very small group of hands who are profiting from that kind of thing. Yeah. So I think circuit breakers can be implemented in a way that does not restrict freedom in any meaningful sense.
Yeah. I'll say, particularly in future, particularly in derivatives, right, where you have lots of leverage and lots of capital at risk. So basically, that moment of dislocation, where basically the guys you have on your platform, are not able to trade, just for that 1 minute, because then maybe they sort their things out. Obviously, it can make a huge difference.
Yeah, just to kind of quickly add to that. I think what Ari said was exactly on point. And then the fact that there's other issues in this market, like the lack of cross margin and things like that, where you cannot which prevented people from moving collateral, to meet calls on the exchange, right? Which make the problem like 10x worse than it actually is. But I do think actually, and a little bit of a plug here, we are actually working on a solution where we actually think we can solve this problem but doing it without circuit breakers. Like for instance, a block trade, right? Why can't you have all the liquidated positions when the exchange can just ping a group of market makers and liquidate it in an anonymous RFQ manner, and then those trades are blocked into the exchange? So we're actually working on that right now. And so that solves the problem of never having to shut the exchange down, right? But and also it achieves and you can do it anonymously, so that way there is no kind of asymmetric information. People can't take advantage of the exchange, especially if it's done through a platform such as us, where you can ping in an anonymous fashion. And then also market makers can just take that and dissipate that risk across all the exchanges that they're doing. It doesn't have to just sit in that one book, right? Which is what the sell wall was on BitMEX was for. So hopefully, that solution of ours can go live, and we can start testing it with a couple of exchanges we're speaking to. And if it works, then that solves the problem that we're talking about. But it's exactly right. It's liquidations do matter, right? And to go back to Nicholas's point earlier, and also Ari mentioned it's difficult to enforce some sort of collective agreement in terms of, okay, we're going to shut off prices here again because everybody thinks I'm going to lose volume to my competitor, as Catherine mentioned. But I do think there are solutions that are elegant enough where you can do both and still achieve the orderly price formation and liquidation that the market needs.
So Aaron, you brought up a good point, and it's a point that I kind of went through actually just yesterday. So we run a fund that does cover calls on Bitcoin, and we provide that to clients with monthly dividends and so forth. And basically, we were required to move collateral onto Deribit, and that moving a collateral took a long time. It's not Deribit's fault; it's actually really more on the custodian side. And I'm sure you've seen this before, where really moving assets around took a lot longer, where the markets are 24/7, but the custodians are not moving assets at 24/7. Do you think that that's where the bottleneck is with regards to all this? So maybe we try to move the solution away from circuit breakers on exchanges and more towards how do we move collateral or kind of a trust, a credit of some sort, which the tokens themselves are supposed to be, more efficiently, 24/7 on and off exchanges.
Certainly, part of it would certainly help. Yeah, I mean, we're kind of talking about prime brokerage, which is so many entities in crypto we're working on from different angles. Custodians are working on adding prime brokerage services as our exchanges and trading desks, and certainly for us on the buy side, it would be hugely beneficial. It's very tough. Everything is way more expensive and way slower to do than it would be in traditional sense. I don't really complain about it because those obstacles are also barriers to entry and reasons that we're not competing against most traditional hedge funds today. But prime brokerage, cross collateralization, especially as yield, staking and lending become more important. This kind of segues a little bit into the lending market, where currently I'm very uncomfortable with it because you've no transparency, you've no real way of assessing counterparty risk. So in the future, and I don't think this is that far off, you'll be able to have assets at a custodian and trade on an exchange with the assets still sitting in the custodian, with basically a letter of credit against those assets. There are already little experiments with that, but it's not widespread. You have things like Silvergate Exchange Network that allow for us to settle trades with most OTC desks on a Saturday morning, for example, which is fantastic. It's good for everyone. It's just a reduction in friction. So we'll get there. It's just slow because it's operationally demanding. It's very difficult from a regulation perspective, but we're getting there.
Yeah. Is that what kind of institutional adoption is waiting for? I mean, I think this is kind of one of the fundamental questions that I always get when I get in these conversations. Kind of a chicken and the egg. Institutions want all of that infrastructure in place before they come in, or is it a matter of once they come in, they can build that infrastructure because the institutions are the ones that actually have that capital pool to support and so forth? I see Catherine smiling there, so would you like to comment on that?
I don't think I've ever met any institution that said, "Oh, please give me the hammer and nail and piece of wood. I'd love to build this myself." So I think they absolutely want to have kind of a white glove service when they're entering crypto market, just as they've been receiving through the regular asset classes and prime brokerage model that they see from the consolidating bulge bracket banks. So there's still a huge gap that helpful things like our Paradigm are bringing us up to scale of that convenience factor of being able to message and transact in the same platform like they're used to on the Bloomberg terminal.
Oops, I think she dropped off.
Yeah, we just lost her. So I think we're about to wrap up the panel anyway. So I'll continue. Hopefully she can rejoin us shortly. I think she brought a really good point up. I think at the end of the day, a lot of the institutionals may probably just want to buy their way in or be white glove serviced into this industry as opposed to building their own. So, do any of you have any thoughts behind kind of institutional, coming into this market, or have you seen that already happening to a certain extent? Anna, and I know you see a lot of kind of OTC trades come through. Are you seeing that more from the traditional guys, or is it mostly the new age players like Ari?
The new age players like Ari have been around, right? They've been around. They've been getting better and better and better. They're growing mainly because they were early, and they've done pretty well for themselves. But we are actually seeing, it's slow, admittedly. But we are actually seeing people venture into this space, right? I'm in the camp that I don't actually think that institutions are waiting necessarily for tools or infrastructure. I think generally speaking, you talk to any traditional guy. I speak a lot to the folks I know from the old markets I used to trade in. They generally are still uncomfortable with the concept of crypto. Right, just like the regulation surrounding it, it's a lack of uncertainty. Still, there's a lot of uncertainty around how is this regulated? What is it even? Right? There are no really clear. For some things, there are clear-cut answers. But I think until that hurdle is kind of gone over completely, you're going to find it very difficult. I think it'll be difficult for real money guys to kind of allocate some portion of or of their alternative investment bucket or something like that, right? But I do think that is changing. You are seeing more macro guys come in, allocate, just like inch into this space, but they are just not as fast as we'd like it to be.
Yeah, I saw in the news that Renaissance Technologies has put crypto into their offering circular. So they're now have the ability to add that into their position, just I think for futures. But I think it's a great first step. They're one of the most successful guys out there, and hopefully they can participate a bit more. And I think part of it also is a little bit of a chicken and the egg. I mean, if the infrastructure is there, it's easier for them to change their mind and come in and so forth. And hopefully, we can see more institutional platforms become available to them for them to join also. And I think having that really helps. For the type of things that I'm going through, and we use some of the biggest custodians out there, and even then I'm very frustrated with the service. So and it's not a complaint to them personally. It's more about just that the technology just isn't quite there from a securities perspective. And welcome back.
I said the wrong answer and the internet shut down. The institution sated me. Silence her.
You're a silence. Okay. No, that's so I think that's great. So I think we're actually just wrapping up the panels. Does anyone have any kind of last moment comments that they want to put in?
I'll comment on that point. I do think it's very tough today for an institution to be trading the way we're kind of talking about. You think about it, even a standard hedge fund like a Renaissance that, we're talking about having to diligence a custodian of a type they've never had to think about. The challenges, we've been talking about the challenges of getting assets from a custodian to an exchange, right? And thinking about the time lag and meeting margin calls from that. Yeah. Then you're talking about most volume, or much of it, being on unregulated exchanges. Using Paradigm is a wonderful platform, and Anand's a great entrepreneur. This is not all criticism, but it's new, right? Institutions the idea of trusting tons of money with new software is scary. They trust Bloomberg because it's Bloomberg, right? And Paradigm hopefully will someday be Bloomberg. But it's just that takes a lot of time. And a lot of the nuts and bolts, we don't have prime brokerage. We don't really have cross-margining. And so they're kind of, most of the big institutions are looking at things like CME futures where you just don't have the liquidity. So my point is, as we continue building infrastructure, I think that will open up a lot of inflows. there is a lot of money, I think, waiting to be able to seamlessly deposit at a custodian, get the equivalent of a letter of credit at a trustworthy exchange that has the liquidity they need. And I think there's a lot of money waiting for that.
So just this morning, just to quickly add, we were speaking to a large traditional market player, and the timelines that, so we were talking about, okay, the whole idea of them getting comfortable. They love the tool. They think it's, they're like, well, why don't I have this in the old world? And, it would have made my life so much easier. But then when we talked about the concept of onboarding, they're like, yep, we'll probably talk to you in the next quarter. So I'm like, what are you talking about? Like, and they're like, oh, you have to go through compliance, risk, all of these guys have to give you a check. And that's like, 50 people, right? So the process is like there's all these like entrenched inertia that is just against, adoption. And I think like, as I already said, I think over time, I think it's just a function of time. You just have to go through it, and then over time it will come. We're already seeing signs, so it's not like it's not there and we're waiting for it to come. It's already happening, but it's happening on the far end of the risk curve, where like the Chicago guys, for instance, they're much more ready to take risks, the proprietary traders, right? And so that's why they're ahead in terms of adoption. But the macro guys are next, and then soon we'll trickle downwards, and then hopefully we'll see the adoption that we want.
Great, thank you very much, and I think we're running out of time, so I'm going to wrap up here. Thank you very much for joining us on this panel. I found it very interesting. I was excited before about crypto derivatives. Now I'm even more excited. So looking forward to working with all of you going forward. Thank you.
Thank you, guys. Take care.
Thank you.
Check out Binance Academy if you don't know what a derivative is.
Thank you.
Bye.